John, thank you very much. It's always a pleasure to be here. The name of my presentation is Economy and Internet Trends. This is the outline that I'll be going through. First, I'm going to talk about the financial markets and go through an economy update and a dashboard. Last year, there was a lot of interest in the economy trends. While this is a technology conference, knowing what's going on in the economy is super important. Many of you run businesses, and I want to help give you the tools that you'll need to watch on a go-forward basis as you build your businesses to try to figure out what's going on in the economy. And then I'll spend a lot of time on the mobile internet. We think it's the biggest incremental driver of internet user and usage growth, and we think it's still underappreciated by the markets. The one qualifier I must say is I'm not an economist, and I've gathered a lot of stuff from our economics team to give you a sense of the lay of the land. On the financial markets, they've obviously rebounded, and the good news for many of us in this room is technology has been a relative outperformer. The stock market is typically a leading indicator of economic growth, and after a very difficult time at the end of 2007 and certainly through 2008, depending on which market you were paying attention to, we've had great recovery, though still not close to the highs at all. But the Russian market is up 181% versus a 36-month low. India is up more than 100%. China up 70% plus, and the S&P 500 in the U.S. up 60%. So again, oftentimes market performance on the downside indicates that the economy will weaken, and the same thing happens on the upside. I'm first going to go through some of the positive indicators that we're seeing in the market, and then I'll go through some of the risks and the negative indicators, of which there are many. Borrowing has become easier. Credit spreads have narrowed. While borrowing is easier, the cost of borrowing is still higher than it has been at normal levels in the past. So a good sign, but not perfect. Stock market volatility has lessened, and the market is far less volatile than it was, obviously, a year or so ago. It's back to normal levels, which is a good indicator that people and that investors feel as though they have reasonable confidence in the market outlook. The S&P 500 has experienced earnings estimate revisions on the downside that were of near epic proportions. 2008 and the first quarter of 2009, we had the largest earnings forecast cuts we'd had in 20 years, and that began to turn to the positive over the last couple of quarters as we began to see earnings estimates, go-forward earnings estimates rise. And now for the third quarter, especially for technology companies, we've seen a lot of upside earnings surprises, and earnings estimates continue to go up. Also another positive indicator. This is something that's near and dear to my heart, but it looks at technology as a percent of market cap for the S&P 500 composite from 1995 to the present. Technology is the most highly capitalized sector in the market, including other sectors like financials, healthcare, energy, consumer staples. I think that's true for a couple of reasons. One's financials, which have typically often been the leader, have obviously had a difficult year or so. But also with technology, there's a tremendous amount of innovation taking place, and we think that's assisting the market value appreciation. When you look at companies like Apple and Google and companies that are leaders on the web and increasingly in mobile, that's driving a lot of the success in the category. If you look at these industry groups, it's an indication of the innovation that's happening in the sector that's not necessarily happening in as many of the other sectors in the U.S. economy. Intel is not short for intelligence. It is short for intelligence, but it's also short for the name of the company south of where we are right now. And we use Intel Corporation's earnings estimate as a proxy for what's going on in technology. The red line looks at the year-to-year growth rate in earnings. And we just lived through a period that was very similar to what we lived through in 2001, which was pretty bad. The good news for Intel is in the third quarter they just reported they had the fastest rate of sequential growth that they've had in the 30 years of the company's history, and it was up 17%. So again, another good sign, and we keep getting positive earnings reports from a lot of the technology leaders over the last week and hopefully over the next week or so. If we look at the global technology sector, it's following a similar path, and earnings estimates have begun to show relative growth after some pretty draconian declines. The technology IPO market has revitalized a little bit. 2008 was not a great year, but so far we've had 2 times the deal volume this year and 4 times the dollar volume with a fair number of companies in registration. So moving from the financial markets to the economic indicators, which is even more scintillating. This looks at GDP growth and consumption. The trends are becoming less bad. That's a good thing. Global GDP forecasts have turned positive, led by China and India, another good thing. Advertising spending, which will be down big time in 2009, based on a regression analysis, will go up next year, which is a good thing not only for online but for offline advertisers. Retail sales and e-commerce growth appeared to have troughed in the first quarter. Consumer confidence is rising, though still well below normal, and manufacturing levels are returning to normal levels. On the bad news side, on the risk side, manufacturing capacity utilization implies weak demand. New home sales are still off historic lows, but way below normal. Consumer credit card defaults continue to rise, and residential mortgage defaults are at all-time highs and continue to rise, and commercial real estate defaults are rising. And unemployment is high and rising at 10% versus 6% a year ago. Typically, economies stabilize when unemployment peaks, and we're not there yet. A couple other things that, to John's point earlier, debt levels in the U.S. are at historic levels and they're rising. The debt as a percent of GDP is 360%, surpassing where we were at the worst level during the Great Depression. And if we looked at the income statement of the United States, I'll leave this for your looking at the slides, but to say the least, expenses exceed revenue. And I don't know how many people in the room are on Social Security, Medicare, and Medicaid, but and may not be when you are entitled, but Social Security, Medicare, and Medicaid spending in 2009 is nearly twice as high. The expense from that is nearly twice as high as all the personal income tax revenue the United States government received in 2009, and that expense is only going to get bigger. I bring it up to you guys because it's important to your future, it's important to your businesses, and while looking at the income statement for your country may not be the first thing you want to do in the morning, it's something you should do and pay attention. So moving from the thing I'm not an expert at, the economy, to something I know a little bit about, the internet. This is a list of the things we've talked about over the last 6 summits. Here are the 8 themes. I'll go through these quickly. Mobile internet usage is and will be bigger than most people think. Apple's mobile share should surprise on the upside in the near term. Next generation platforms are driving unprecedented change in communications and commerce. The development of the mobile internet in Japan and the development of the desktop internet provide, we think, great proxies for how the mobile internet is going to evolve. 3G adoption trends vary by geography. The US and Western Europe and Japan are very advanced. Everybody else is a little bit behind. The carriers in the US and Western Europe are facing surging network demand, but have some difficult supply issues and uncertain economics. And I'll talk a little bit about regulation and then wealth creation. The first key theme is that we're entering into the next major computing cycle. A few of you in the room have lived through a few of these. These are always big deals, and the Apple iPhone and the iTouch have really pushed this one to the next level. From a market standpoint and a wealth creation standpoint and a market opportunity standpoint, a simple point of math on these cycles is that each cycle tends to be 10 times bigger than the last one. It has 10 times more users. There were 10 times more mini computer users than mainframes, 10 times more PC users than mini computers, 10 times more cell phone and desktop users than PC users, and we think they're going to be 10 times more mobile users. So it's a big opportunity. The good news is that it is ramping faster than any cycle I've seen in modern times. So the mobile internet in the US is ramping faster than the desktop internet ramped, which for most of us in the room ramped pretty quickly. It's not just about the 3G network, it's not just about the Wi-Fi network you have in your home or your office. If we look at GPS, 57% unit growth, 3G, 45% user growth, Wi-Fi, 42% chipset growth, and Bluetooth, 45% growth. All of this is happening in a recession. That is a very good thing for the outlook for the industry. Oftentimes when you look at industries, many of you get to places too early, and some get to places too late when it comes to evolution of markets. The good news for wireless broadband in the US and Europe, it hit an inflection point. It will hit its inflection point, i.e. more than 20% penetration of the available market in 2010. Location-based services, when you peel it back, are really part of the secret sauce about what makes the mobile internet so exciting. So drilling down on Apple, this looks at Apple's iTouch and iPhone unit shipments from the first quarter of launch and compares it with some of the most successful products in history of technology: Nintendo Wii, Nintendo DS, Sony PSP, RIM BlackBerry, and the Apple iPod. It is the fastest growing piece of consumer hardware the world has ever seen. If we look at usage share versus unit share, according to the data sources that we look at, iPhone has about 65% usage share of smartphones, but has only 11% unit share. That means people are using these things a lot, and that warp of usage share versus unit share usually is a positive indicator for unit share for that provider. And the two operating systems that are gaining share in that regard are the iPhone and Android. Next generation platforms, obviously you know a lot about Facebook. If you put it into context, it's been the largest share gainer of online usage in the world over the last 3 years relative to all other websites that are out there. We've had 4 and more very powerful new publishing and distribution platforms for media get created, and they continue to grow very rapidly. We believe they're still underestimated. We think of Facebook as being this generation and next generation communications platform. It really is becoming the multimedia repository that you have in your pocket, and will allow you to do a lot of different things. If we look at the way the mobile internet has evolved in Japan, mobile usage of social networking on mobile devices is 3 times greater than desktop social networking, according to the data from the leading social networking site in Japan called Mixi. Mobile was only 14% of usage in second quarter 2006. It's up to 65% now, going probably to 80%. We think that's how what Facebook and other website usage will look like in the coming 5 years. I'm going to skip past that. But I'll go back if John will give me time. But it is pretty interesting what Apple was able to do. I think it's interesting, and you're either laughing because you're interesting, or I'm making a fool of myself, and I'll buy either one is fine. If I'm still going to skip these, and now they're cutting me off. We'll get back to that if we have extra time. But the fourth theme, and this looks at Japan. Japan shows us, as I said before, how we think e-commerce and paid services and advertising will develop in the United States. But the rest of the world markets, from a monetization standpoint, are where Japan was in 2000. And Japan has done a great job of monetizing advertising and e-commerce on the mobile internet, largely with NTT Docomo and some other services. But there's a company called Rakuten in Japan, which is, I'm hesitant to call it the Amazon of Japan, but it is a leading e-commerce site in Japan, and 18% of the company's revenue comes from e-commerce. Right now, we believe less than 1% of Amazon.com's revenue comes from mobile commerce, and we think that will switch to the 15% level in the next 2 to 3 to 4 years. And for companies that aren't engaged and focused on how to optimize for mobile, it's a problem. One of the interesting things about mobile devices is that on the desktop internet, vendors and advertisers tend to pay for their customers. Advertisers pay for customers, and the majority of the revenue comes from that in that way. On the mobile internet, the vast majority of revenue comes from the consumer paying 99 cents, 50 cents, $1.50, whatever it is, and that creates very interesting monetization opportunities on the mobile devices. This is one of the other eyesore slides, which gives you an indication in the remaining 43 seconds that I have that the Asia-Pacific market, ex-Japan, Eastern Europe, and South and Central America won't hit that mobile sweet spot until sometime in 2011 and 2012. So there's still time in those markets. Key theme 6, the carriers in the U.S. and Western Europe face surging network demand but uncertain economics. For those of you that use certain carriers, you might think that the service isn't ready to handle the demand that you're putting on it. And the good news, bad news is that mobile data users are likely to triple to 1 billion users by 2013, and that's not very far away at all. AT&T has experienced a 50-fold increase in mobile data traffic. I know Kevin from Juniper is going to be speaking later today, and he'll go through some of the details of how do you serve that huge demand in use of data. One of the things that Brian mentioned is Wi-Fi, and for those of us that are active smartphone users, I don't think we'd be nearly as happy if we didn't have that Wi-Fi overlay. And by AdMob's estimates, 40% of iPhone users, 40% of the usage is on Wi-Fi. So it's been a great offload technology, likely to become more relevant over time. Next theme, regulators can help and hurt. It's good that I've run out of time here. And the next thing, most important to many in the room, mobile-related share shifts will destroy and create material shareholder wealth. Massive technology changes typically shift dynamics between incumbents and attackers, creating new winners and losers. They tend to follow a pattern. In the early days, the infrastructure companies tend to do well, followed by software and services companies, followed by content and aggregation, and then followed by retail and commerce. And this is a path down memory lane, looking at the winners in the mainframe era, winners in the mini-computer era, winners in the personal computer era, winners in desktop internet computing era. Next year we'll come back, if John invites us back and gives us 17 minutes, and we'll go through some of the winners of the mobile internet, but I'm sorry we've run out of time. But what tends to happen is companies, there are rare companies that are able to evolve from one generation to the other, but you usually get a whole bevy of startups, as you can see here, that really capitalize on the changes. So with that, this is the U.S., if you were really excited about the United States of America income statement, you have all the details going back to 2000 here. And now I must go through the disclosures. And you can find this at morganstanley.com/tech-research, and the disclosures will take an additional 10 minutes. And there we go. Thank you very much.